Elon Musk is celebrating a significant victory in his drive to reduce government spending. This the headline today. He successfully shut down the US Agency for International Development shortly after President Trump's inauguration. Now, Musk is also aware the true measure of his team's success lies 200 miles away on Wall Street. Bond investors have sharply increased yields both before and after Trump's election and are hesitant to lower them. Let's bring in David Scutt from StoneX now with all of the latest on this. Great to see you, sir. Talk to us about what Musk is doing.
Yes, the Department of Government Efficiency is getting a lot of headlines and creating a lot of controversy. But it's really interesting to see how the bond market is reacting. Now, Elon Musk is actually getting what he wants right now. We're seeing long bond yields in particular in the United States falling quite precipitously. But it's not so much because of what he's doing, but potentially what it may cause to the economy. So it's kind of an even balancing act right now. Bond yields in the United States right now are starting to go an edge lower because there's concerns about we might be tipping into another recession.
Talk to us about the relationship between bond yields and what Doge is doing for those who may not understand.
So part of the US economic exceptionalism story and why the US economy has been outperforming almost everywhere else in the Western world over recent years is partly to do with the size of their budget deficit. Around 7% of GDP, which is measured in the trillions of dollars. Now, what they're trying to go and do, and part of it is the Doge, is to go and slash that by half, or even more than half, to around about 3%. That's Scott Bessent, the newly appointed US Treasury Secretary's target, where he wants to get the budget deficit to in 2028. So what that's doing is they're trying to go and strip out expenses. And when you strip out expenses, it means that their need to go and borrow is not as great as it would be in the past. And that's helping to go and lower bond yields, particularly further out the curve.
There seems to be quite the distance between political and what investors are seeing and believing. Do you see it coming closer together?
Not really, not in this bipartisan world, definitely not. But certainly what it's causing right now is that we're seeing that the Treasury Department is trying to go and restrict long bond supply. So they're making it kind of a scarcity factor. At the same time, you've got Doge in there cutting pretty aggressively, sparking some concerns about what they might go and do for economic growth in the near term. When you put it together, I can see why it's controversial, but the end goal is a noble one. They're trying to go and make it more efficient and lower borrowing costs, which is essentially on the US taxpayer. So potentially in time it will, but right now there's so much controversy on either side, and I don't think it's going to be resolved anytime soon.
It's just been going for so long that it's become this whole industry, and we've forgotten about the idea that when you borrow money, you have to pay it back.
Exactly right, and everyone will go and tell you, everyone who's a realist, that the US budget trajectory is completely unsustainable. At some point, it will go and eat itself. The interest repayments and the like would become so great that you won't be able to go and spend money elsewhere. And that's clearly not something that the US government wants to go and be. They don't want to go down the path of having to go and print money as well. That just leads to hyperinflation, the like. That's not a good look, especially for the reserve currency of the world. So it's a noble feat, but as you said, there's lots of vested interests who have made a lot of money over the years riding the wave of government spending. And at some point, that's going to have to go and stop. And looks like it's going to potentially be quite soon in the United States.
We haven't seen rapid cost cutting like this ever, right? President Obama promised it. It didn't happen. Things ended up going in the other direction. I mean, there were wars happening that were very expensive as well. There really aren't those wars to the same degree. The US might be assisting, but they're not directly involved. So when we talk about how the bond yields are reacting to this kind of sudden rush to cut costs, and it's not just cutting costs through Doge. You've also got the president announcing a $5 million golden visa, and if you bring in 200,000, you're talking trillions of dollars that they believe that they can do, and that companies like Apple will jump on to bring highly skilled workers to the United States. So these poor old bond investors are copping it from all ends.
They are, look, at the moment, so they're trying to go and plug the deficit at the moment. So that's part of it. And then don't forget the tariff side of the equation as well. Just that little pesky matter of the tariffs that might be implemented.
The External Revenue Service.
Exactly right. So that's another way they're trying to go and plug that deficit. And then at the same time, they want to go and give income relief coming through to businesses and to households and the like. Again, a noble cause, but is it actually going to work in practicality? Back to the original point, though, have we seen this in the past? We have seen it in modern times. And look, I can understand why the market is getting nervous about the potential for it to go and lead to quite a steep deceleration in US growth, or even maybe a mild downturn. Because if you think back to coming out of the GFC, there was a degree of austerity that was in place, particularly in European nations, which really prolonged the downturn that we saw there. And so looking at that now, looking at how abruptly things are taking place at this stage, I can see why people are scrambling for bonds, particularly those longer dated bonds, where there's a real ability to go and move aggressively if you do have a change of path when it comes to economic growth.
Yeah, I think you're absolutely right.